Hey everyone, I'm Charting Man Dan, trader and technical analyst with the Chart Guys. In this video, we're going to check in on the markets as the bears continue their control, but things are getting extended in some names to a point where I'm going to be looking long for a couple day bounce, just looking short term, but in the near term future, that's what I'm scouting for. And I'll tell you why I'm looking that way and what I'll be looking for to affirm whether or not the bears are going to keep complete control after this short term bounce. So we can see on the futures charts, the S&P 500 bears following through after the rejection from EMA 12 yesterday. Big clear lower lows at this point. And we look at the Nasdaq, same thing, following through, confirming the daily bear flag as the S&P 500 did that yesterday. Week closes down at the lows of the day, and I want to see gap down opens tomorrow to go long. And I want to go long on Tesla. I'll look at why in just a moment, and I'm going to be watching ARKK and related names as well. And again, this is just a short-term bounce that I'm looking for, but things are getting a bit extreme in some of these names. So S&P 500 and the Nasdaq still right at weekly EMA 12. This is the level where bulls need to show up and play a little bit of defense. One thing I'm keeping an eye on is 4-hour RSI levels on a lot of names. And if you look at the Nasdaq futures chart and you scroll back and look at all year, the RSI has not really gotten oversold, even back into the end of last year. The dips under 30 RSI were down to 27, 29, and so here we are approaching. And you can see even this entire drop, we got down to 30 and bounced. And then we got down to 34 and bounced, and 33 and bounced, down to 32 and bounced. And so here we are right now, down at 32 again. So if we see a gap down open tomorrow, on ideally everything. I want everything to gap down. Just like we saw NVDA gap down and V-shaped bounce. When you gap down, it often makes that initial bounce a bit easier as you have a gap in prices and a lack of resistance in that little window. And so looking at QQQ, if we were to gap down open tomorrow, I'm looking for a temporary bottom. So we'll see if we get it. Keeping in mind, the burden of proof is on the bulls. And I'm not just going to be scaling in long. I'm going to make a couple long entries. I'm going to place my stop losses and ideally try and position myself risk-free. And so looking at QQQ, what would that look like? Let's just say we gap down, open tomorrow at 361. If I go long, and it won't be QQQ, it'll be individual names, but if I were to go long at 361 and then we get an hourly bounce, I can exit partial position after a 1% bounce, stick my stop under the low. If we keep dropping, I'm wrong and I stop out. If we confirm an hourly uptrend, I have a very comfortable long position. So that is my style of trading, and that's what I'm going to be watching for on Tesla tomorrow. We'll get there in just a moment. Semiconductors, big bounce on Monday, giving it back. So daily lower high set, 150.109, and we're looking at the recent low, 145.02. Tesla played the bounce today, and I'm looking to do the same thing tomorrow. So today we had the gap down open, and I bought first thing during the live stream. And then whenever you go 1% counter trend in literally 2 minutes, I am always going to take partial profit. And so we went 1% in 2 minutes, and so I exit a third of my position. Then we get a bit more follow through. I'm down to a half position. And then I exited the rest of that bounce play when this support level was lost because we failed the high of the day. And if we were going to roll over from there, that's the first indication of an hourly lower high being set. And while I'm playing that bounce, I'm always reminding myself, we're still in an hourly downtrend across the board. I'm not looking to be a hero here. I'm looking to lock in, a 1.5%, 2% move on the morning and be done with it, if that's all that the bulls can muster. And so stopped out, and the bears then followed through from there. But I'm looking for the same thing tomorrow. If we gap down, I'll play the same way. Look at the 4-hour RSI on Tesla. It's currently down at 23, and I like historical RSI levels when they get to some extremes. And we can see back here, we got down to 21. So if we were to gap down tomorrow, that RSI would be in the low 20s. We had a significant bounce last time around. And of course, the all-out collapse to end last year got a little bit more extreme. But if you go back and look, you can see the 4-hour RSI over the last number of years does not stick under 20 for very long. And so we're approaching 20. In addition to that, we're about to hit daily oversold. The last time we hit daily oversold was when the 4-hour RSI was 22, and that marked a monthly higher low. So if we get a second gap down in a row on Tesla tomorrow, I'm going to play the hourly bounce the same way, but this time around, I'm going to try and swing trade it. So today, I just took my profit and locked in the day trade. This time around, if we gap down tomorrow, let's just say we open at 223, and I enter a long and we bounce to 226, I sell half, my break even is 220, I set my stop at break even, and I let the trade play out. It's either going to stop me out, or we're going to get daily bounce follow through. So that is my game plan into tomorrow. We've got some weakness after hours, and we'll see if that keeps up into tomorrow pre-market. I hope it does, to give me that setup that I'm looking for. XLV, struggling at the upper 136 resistance zone, and if we break 134.47, which is being tested, we technically lose the daily uptrend. And again, this is a rising wedge. So as we're looking at the bears, yesterday we talked about the lead bulls on Team QQQ, Amazon and Google, the setup to join the bears. And Amazon joined the bears today. And so we're now looking at that from a sector perspective. Does our lead bull sector, XLV, does it join the bears by rolling over? And if we were to fail 136.85 and drop down and break 132, then that would be a significant shift. That would be going from a clear uptrend to then confirming a weekly downtrend. So that's going to be key over the next couple of weeks. One thing to note, I just made this Twitter post. Trading is hard, but we also make it a lot harder than it needs to be at times. And when you just look back at the summer, we had weekly bull flags on the S&P 500 and Nasdaq confirm to start May to get us to 6-month highs or whatever it was. If you went long at that point and stayed long while the daily uptrend remained intact for 3 months and then exited long or just went short when we lost the daily uptrend for the first time in 3 months, you are having a great trading summer. Two things: a weekly bull flag into a new 6-month plus high, a daily uptrend for 3 months from that point, and then the loss of the daily uptrend for the first time in 3 months. All of this weakness has originated from that shift. There was euphoria. We were heading into earnings in significant euphoria, and then we lost the daily uptrend. And this is the result of that. And so, again, now it's just a question, is this a long-term lower high being set for a tightening range, a good bit of 2024, or can bulls salvage this weekly consolidation and recover? And the more we drop from here, the higher the probabilities that we confirm a weekly downtrend as a result of the next bounce. And that is the next goal for any bear, is confirmed weekly downtrends. We got the daily downtrends confirmed. We know eventually there'll be a weekly bounce. That's part of the reason I'm keeping an eye out for some short-term long entries. And then the bears will try and confirm the weekly downtrend. Financial sector still weak. So hourly bounce, just a lower high, and then rolled over and closed near the low. IWM is still weak. A bit of free fall now. So losing weekly EMA 12. We have a triple top at long-term resistance. And we have a lot of space for a weekly lower high to be the result of the next bounce now. With the loss, or we'll wait till the weekly candle closes, but the fact that we pulled back under weekly EMA 12 means that we can bounce 5% and still form a weekly lower high. But short-term, IWM, 4-hour RSI, is beat up. You look back, you say, okay, we did dip below 20 recently. Going to pay attention to that, but otherwise, 4-hour RSI over the last bunch of years does not drop below 20 for long at all, if it even gets there. And so here we are heading down. And if we were to gap down open tomorrow, that 4-hour RSI would be in the low 20s. And again, when I say short-term bounce, I just mean looking for a couple-day bounce, because IWM, next time we bounce, has tons of space for a daily lower high to be the result of the next bounce. ARKK, same thing, daily stair-step drop. Just fell off a cliff And the 4-hour RSI currently down at 24. Go back, go back. What happens when we're down at these levels? We generally find temporary bottoms not far from these levels. So going to be watching for a daily bounce on ARKK and then a daily lower high to be the result of this bounce. So again, I just want to be very clear. I am a short-term trader. I'm talking about short-term bounces. AI daily bear flag confirmed, and also the weekly downtrend confirmed. Tops are in for AI for a while. Not a ton of follow through, but that's a bear break. PLTR is holding on stronger. Still a daily bear flag on the table, but we have not confirmed it yet. If I'm looking long on an ARKK bounce, on a broader market bounce, and if I'm looking at AI names, I'm definitely choosing PLTR over AI just because we're in a weekly uptrend still. We're testing weekly EMA 12 support, and there's not nearly the same major red flags that AI has. RIOT, 4-hour RSI is in the teens. Scroll back. Look at the last bunch of years. What happens when the 4-hour RSI breaks below 20? It marks temporary bottoms generally. So I was watching for it today. I ended up stopping out, break even on a bounce attempt. I would love a gap down open to be looking for a 4-hour oversold bounce to try and shape up. Psychedelic name, CMPS, had some news of a private placement and huge volume. It shot up. Still keep an eye on this year-long weekly tightening range. We now have a new weekly high or low set. Anything under 1092 is just a lower high. This is going to break before the end of the year. It's not a picture-perfect equilibrium, but it's a very clear tightening range. This is a low-cap, volatile name. All you need to know is we went 30% today up at the high of the day. Volume climax marked that top. Just keep an eye on it. Let's see if we get any kind of news hype to try and help that break bull from its long-term sideways range. The dollar is still strong. I am not interested looking long the metals or crypto or even the stock market while the dollar is up at the highs. I want to see the dollar show signs of daily consolidation. If I'm gonna, that's a piece of the puzzle. That's one of the check marks that I need. If I'm looking long for a couple day bounce, I need to see the dollar shaping up daily consolidation, and it's not right now. I'm looking at the daily RSI. Look at the last few tops, and we are right there. And previous price level 103.57. So just watching closely, but again recognizing there are no red flags for the dollar bulls in this moment. So that is one of the major things, one of the major pieces of the puzzle that I'm going to have to see shift. Back to major tech names. Forgot to talk about the Amazon shift. Again, Amazon's doing what Meta did. And this is where having a good memory comes into play, because I looked at the Amazon chart early this week, or to end last week, and was just saying, that's the same chart as Meta. So again, it was the gap up on earnings, the daily high or low, lower high, downtrend confirmed, and now Amazon did the exact same thing into the gap fill. And it went very quickly from lead bull to lead bear the last 2 days. And Google, daily equilibrium broke bear, no follow through. Let's see if Google joins into the gap fill. There was rotation today where Amazon and Google were lead morning bears, and our previous lead bears, Apple and Microsoft, were showing strength. They were both up 0.5%. Amazon was down over 1%, but by the end of the day, we rolled over. And essentially, because of what QQQ was dictating, it was these names, Microsoft and Apple, would have been positioned well for a bounce if QQQ could have bounced, but it failed. And so really all it was Apple and Microsoft didn't drop as hard as Amazon and Google. So there was relative strength in that regard, but not relative strength to lead to a bounce. QQQ gave us a really nice 5-minute megaphone at the end of the day. We had the FOMC minutes from last meeting come out, and I was live streaming crypto here and was saying, watch the megaphone. If we bull break with no follow through, it's a megaphone. And then gave it all back. 1% drop into the end of the day. So the metals are still weak. big drop on gold to fresh lows. And we are breaking weekly support. Silver still holding, but just barely. Not surprising because the dollar is strong. Miners are in free fall. Gap to fill down at 27.95, already filled today. Oil, daily uptrend lost. Lots of space for a daily lower high to be the result of the next bounce. Weekly consolidation underway. Bears need to confirm the daily downtrend from here if that weekly consolidation is going to get follow through. And natural gas bears following through as well. It's got its own potential megaphone. Daily downtrend. And that's leading to energy sector weakness. Let's see if the energy sector shapes up a head and shoulders. If oil bounces on the daily and then confirms a daily downtrend, the energy sector will likely be a head and shoulders. So that's a lot of info, huh? Lots to keep an eye on. And again, just if you're thinking bigger picture, and if you're not a short-term trader like me, you don't care about a short-term bounce. Your guide is daily EMA 12 on these futures charts that has rejected the price last 3 bounce attempts. So I might get my short-term bounce attempt, and we might just reject from it yet again and keep the daily downtrend. So I'm looking for short-term climax bottoms for 4-hour oversold bounces to last a couple of days. I'm watching for it in ARKK, in Tesla, in RIOT. But I'm going to be safe and use stop losses to protect myself in case I'm wrong. So we'll see what tomorrow morning gives us. Hourly downtrend is our guide. Bulls have not confirmed an hourly uptrend in QQQ. Well, we did on Monday with no follow through. But it's been a nice clear guide yesterday and today. Volatility picking up a bit. And we'll see what we get for the rest of the week. Appreciate you watching. Thanks for the likes and the shares. Here's my dog, Sweetie Pants. Do good things.
Hey! Hey! Wow, you're real tough.
Hey!